Good morning, ladies and gentlemen. A real pleasure and honored to be here in preeminent maritime conference. I am Hongbeom Park, head of Korea of VesselsValue. I will talk about shipping market outlook today, covering bulkers, tankers, and containers. Before I do that, just for those who don't know us, let me give you a brief introduction of VesselsValue. VesselsValue was recently acquired by Vessel Nautical, a global leader in maritime technology, trusted by the world's largest buyers and sellers of marine bulk freight. Vessel has over 38,000 users and having more than 400 team members. Vessel has been focusing on maritime sector since 2003. 4 leading brands, including VesselsValue, are under one roof of Vessel. VesselsValue is leading provider of automated valuation and market intelligence in maritime sector. Founded in 2011, and we have more than 140 employees now. Beginning with the Vessel IMOS platform, Vessel has always been focused on helping clients make and optimize decisions. So we have Ocean Vault, hand-drawn port and berth data, and dynamic API capabilities. Q88, questionnaire data, VesselsValue ship and valuation database. The combination of those data set and capabilities will allow us to deliver unique insights and decision support information to our clients in the moments they need that information. Enough for that. So let me start with Korean sale and purchase activities in 2023. So this graph shows number of orders by Korean owners yearly basis. And in this year, the number of orders decreased compared to in the last 2 years. Looking at ship types ordered by Korean owners, vehicle carrier was the most popular ship type, followed by container ships. And Korean owners ordered largest number of ships in China, followed by Korea. And this graph shows second-hand buying in red and second-hand selling in gray. So similar to new building orders, in this year, Korean owners spent much less money compared to 2021 and 2022. So normally, when the shipping market is in a boom, people spend more money. So this year, the market was still quite good, but compared to 21, 22, the market was a little bit dropped. So that's why the activity decreased a little bit. Looking at the ship types, Korean owners transacted in this year. The bulkers and tankers are the most popular ship type they sell or buy. So the red color showing Korean owners buying and gray is selling. Demolition. So the gray line showing scrap price, dollar per LDT. And even though the scrap price is almost historically high, the number of demolition very limited, proving that the market is very good enough to trade old vessels further. Moving into values. So this graph shows 5-year-old vessel value changes. Zooming into last 1 year change, all ship types in bulker sector, the values remain firm overall. Especially Capesize value increased by 15% now compared to a year ago. Chinese importers seek to resume imports of high-quality Australian ore, hence ton-mile rising. The values for smaller ship types are very much similar to the levels a year ago. Tanker values. This graph shows 15 years old tanker value changes. Strong demand and earning has kept values at very high levels over the past year. Old vessels have been increasingly popular, with many being used to trade Russian oil on the dark fleet. This has sent values to the highest level in 15 years. Suezmax has the biggest increase of 38% year-on-year change basis. 15-year-old container ships, the values for all ship types dropped dramatically in the last 1 year, and the downward trend is ongoing. However, current values are still higher than pre-COVID level. Moving on, historical position of values. This graph shows how much higher or lower current values are compared to historical median back to 1992. So, for example, 36.9% of Capesize means current value for Capesize 5-year-old, the value is 36.9 higher than its median value, which means Capesize vessel currently is very expensive, or we could say the market is in very high level in the shipping cycle. Tank values even more higher than bulk values showed. For example, values for Suezmax, MR2, and Aframax are almost doubled than its historical median values. We used the median values for containers from 2009 up to now, and then the current status is very much similar to other ship types. Container ship sector had been struggling before COVID happens, so the median value is very low, resulting in current values look very high. Let's have a look at supply and demand, which ultimately affecting current and future market condition. The red line is number of live vessels, and blue line is cargo miles or ton miles. The volume of live vessels for bulkers continued to be smoothly increasing. So this is supporting rates at the moment. Looking at the ton miles, it was significantly reduced during COVID, but recovered back very quickly, and now the level is very firm. Taking a look at demand side, in blue, tanker sector was very depressed due to huge drop in ton miles, but in the last 1.5 years, it recovered very quickly and currently maintaining much higher level than pre-COVID level. Sanctions on Russian crude and products has meant that countries have been forced to source oil from further afield. This meant the demand outweighed supply, pushing up rates. Demand has now cooled slightly, but remains high. Number of vessels in red, again rising very smoothly, which is a very positive factor in tanker sector. Number of live vessels for container ships growing more sharply than other ship types, causing rates down, but still the ton mile is very firm. Forecast. So this is fundamental driven forecast. We conduct and update all the figures quarterly basis. Bulk values for Capes, Panamax, and Supra are predicted to continue to grow until end of Q4 2024, Q1 2026. Handys are seeing negative growth, and values are expected to fall going forward. Overall, we have positive outlook for bulkers. Fleet growth is expected to be outpaced by demand, which will tighten the market balance. India is very important for bulker side, And Indonesia bauxite export ban led to China increasing import from Guinea, increasing ton-mile demand. For tankers, values are forecasted to continue to rise in the next few years, peaking at the end of Q4 2024 and Q1 2025. From the end of 2025, values for Afra and Suez will begin to fall, with the other categories following behind. So this graph is forecast for container ships. In the short term, we forecast the post-Panamax and Handy feedermax will have a slight uptick, but in the long term, expecting gradual decrease in values. New Panamax and Panamax sectors, we do believe the values continue to drop by around 15% in Q4 2024. Our current analysis points to a demand growth of around 2.2% yearly average over the period from 2023 to 2026, with a forecasted reduction in growth for 2023 of minus 2.2% following minus 5.2% in 2022. In conjunction with ease congestion, rates have come down sharply and are expected to bottom out in the second half of 2024 before rising somewhat as the pains of returning to normal abate. Looking at the order book, dual-fuel vessels for container sector have surpassed 50% in terms of TEU, indicating the liners are well underway in the green transition. The order book is still significant at 31.4 of the fleet at the beginning of July. However, reports of shipyard delays which can postpone delivery schedule, but on the other hand, further delays will increase scrapping activity. So to summarize, we believe in the short term, the bulk value and container value will increase, while the container values will drop. And basically, the order book itself for bulkers and tankers are very limited. And even though you order the vessels now for tankers or bulkers, the delivery will be maybe early 2026 or late 2026, which means the supply growth will be very limited in the next 2 years. So once the demand is firmer compared to the past or even maintaining current level, we expect the market will be very good. But the container, as I said, the order book is huge, a third of current fleet. So we believe the container market will keep a little bit struggling compared to pre-COVID period. That's all from me. If you have any questions, please feel free to come to me. Thank you very much.